Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook. Today is Wednesday, 7th of November 2012. Long-awaited result of U.S. elections finally is out. Rather expected, I would say. The outcome is Barack Obama is taking his second term, with, of course, a lot of challenges awaiting for him. There was a quite tight result between the Obama and Romney, but Obama won the second term in the White House, overcoming now deep doubts among voters. What about his handling of the U.S. economy to score a clear victory over Republican challenger Mitt Romney? Americans again choose to stick with the divided government in Washington by keeping the Democratic incumbent in the White House and leaving the U.S. Congress as it is, with the Democrats controlling the Senate and the Republicans keeping the House of Representatives. Obama told his thousands of supporters in Chicago who cheered his every word that we have picked ourselves up, we have fought our way back, and that for America the best is yet to come. He vowed to listen to both sides of the political divide in the weeks ahead, and said he would return to the White House more determined than ever to confront America's challenges. The nationwide popular vote remained extremely close, with Obama taking about 50% and against 40% to Romney, after a campaign in which the candidates and their party allies spent a combined $2 billion. The immediate reaction of the market was quite dollar negative, as the dollar dipped against the majors, with euro and sterling regaining some important levels, while the dollar yen spiked lower. However, it doesn't look at this point, according to the technicals, it's still the situation is still fragile, especially if we're talking about euro dollar. That current strength doesn't show enough, it doesn't have enough credibility, I would say, for some stronger action higher. Of course, time will show. We're going to follow today and see. Some technicals are picking up the pace, but still the larger picture is still quite vulnerable for the single currency, and still sees the more focus towards the downside, as this was the highlight of the day and basically the main driver of the markets during the Asian session. And now during the European and the late late afternoon US session, we'll see whether the initial strength of single currency, or initial weakness of greenback will be sustained, will continue, or it will be again back to their original trends. Of course, the commodities benefited recent dollar weaknesses. Crude oil bounced to levels above $88, close to $89, where it's currently standing at 88.40, while gold regained the important barriers at 1700 and the more significant 1726, hitting peak of 1729. That might be signal for some major recovery following a recent dip below 1700 level, and hitting another cluster of strong supports at 1670, 1660 zone. More of this we're going to see in our technical part. Let's take a quick look at today's calendar and see the latest releases and what we should expect for today. As usual, the calendar hasn't been updated, and our apologies for this, but I will give you the figures, at least for the Swiss data that are released a couple of minutes ago. The CPI for monthly CPI for October came at 0.1%, lower than expected, 0.3%, and lower than September's release at 0.3%. Foreign currency reserves dipped to 424.4 billion Swiss francs compared to September's level at 429.5 billion Swiss francs. Still to come, retail sales from Eurozone at 10 o'clock GMT for September are expected slightly in the negative mode with the minus 0.1% forecast for today compared to plus 0.1% improvement seen in the month of August. German industrial production for September is due at 11 o'clock GMT, minus 0.5%, forecast unchanged from the August release at minus 0.5. Important also is Greek vote in the afternoon, Greek Parliament's vote for the approval of the fresh austerity plan. This was actually the main reason of big protests in past 2 days in Athens, as a majority of Greek population is strongly against the current very stiff and very tough austerity plan that is supposed to bring Greece out of the current crisis. Of course, Greece is in need for money, and the amounts are quite big, with the failure to get the next tranche of aid from European Union, increasing basically risk of sliding deeper into the crisis. And we will see. There is strong opposition in Greece, as I said, against the complete austerity plan, and even a lot of people are against Greece being in European Union, and especially in the monetary zone. Now we will see what will be the outcome of this. This is one of the also the highlights. The first one was the elections. The second one is basically the voting of Greek Parliament, and that's all for the morning. Late in the afternoon, we have U.S. Crude oil inventories that are due at 15:30 GMT. And the forecast for today is built of 0.9 million barrels compared to draw of 2 million barrels in the last week. And finally, the last one U.S. consumer credit for September at 20 GMT. It's expected to dip to 10.1 billion in September compared to 18.1 billion US dollars in the month of August. And these are the highlights of today's day sessions. Late in the afternoon, we have New Zealand unemployment rate for third quarter that is expected slightly lower at 6.7% compared to second quarter 6.8%, and unemployment change increasing by 0.3% compared to draw of minus 0.1% in the second quarter. And a batch of data from Japan, bank lending, current account, and core machinery orders are already falling in our next day's business, but according to the GMT time, are listed in today's calendar. We're going to move now to the technical part and see the latest movements. As we said, the fresh dollar weakness has been triggered by the re-election of President Obama. That triggered some strength of sterling and the euro, as well as commodities. And now we'll see what credibility does this move have. Is it going to hold, or it's going to be just another corrective action? As we can see on the 4-hour chart, basically the euro is still in the strong downtrend of lower top at 131.38, 17th of October peak, still holding within the channel. And the latest bounce, as shown on the hourly chart, has retraced approximately 38.2%, slightly above this on its bounce to 128.75, still short of more important levels, previous lows at 128.80 zone and 128.90, what is 50% retracement, and in this area is 55 days exponential moving average. 129, of course, comes as a round figure resistance, and basically the break above these levels is going to give some more strength and more credibility basically to the current bounce. The hourly structure is positive now already. RSI is already out of the overbought territory, but what is more worrying at this point is still quite negative tone seen on the 4-hour chart, as the indicators, despite pointing higher, are still in the negative territory, with the stochastic already reversing higher, RSI starting to point lower, along with the momentum, 14 days momentum that is approaching the 100 level. Still showing not enough momentum and not enough strength in the current bounce. As said, break above 128.80, 129 initial barrier would be more bullish at this point, and would be signaling some stronger recovery. Still, we need to see regain of levels above 129, 21.61.8%, and 129.80, pardon, in order to refocus psychological 130 and previous peak at 130.20 in order to signal the major correction. Otherwise, more likely scenario would be fresh lower top and fresh weakness lower, as basically the pair's recent break below 128 base and the 200 days moving average still sees increased risk towards the downside, as the daily studies are more or less still holding in the negative territory. Break above minimum 129, sustained break and close above 129 is basically to signal the current break lower as a false break, and bring the pair back to the past 2 months range defined by 128 and 131.70 levels. Otherwise, any failure under 129 would turn immediate risk towards the downside, as currently the pair is already reversing. Good bids are seen at approximately 128.40 and 128.25 levels. This is the high of 5th of November 2012, and 128.25 is the highs of intraday highs of yesterday, with the Ichimoku, with the break below 128.00 to turn risk again towards the downside. 128.25, I do apologize, is the also 200 days moving average. So slide below these levels, and the loss of 128 would be again quite bearish for the pair, and will be confirming basically the breakout of from the 2 months range floor, and the signal stronger corrective action. On the upside, also the barrier is reinforced by the daily Ichimoku cloud top. Currently it's at 128.74, where the recent gains were capped. So we have a quite strong barrier ahead of us at 128.80, 129.00. Break there would be supportive for the single currency, and will signal stronger corrective action. Otherwise, risk of a lower top and a fresh slide lower is quite high at this point. This is now we are at the break point at 128.80, 129. If we don't see the clear break set, might be still seeing a risk of revisiting downside supports 128.25 and 128.00. From the British pound, there is also a brief recovery seen of yesterday's, 2 days ago, fresh low at 159.56, with the break above initial 160.00 and upside extension to our next target at 160.40, where the gains stalled for now. This is also the 55 days exponential moving average on the 4-hour chart, and 38.2% Fibonacci retracement of the latest down leg from 161.74 to 159.56. Slight improvement is seen on the hourly chart, but failure to break at least 160.40 still keeping the downside more vulnerable, with immediate support at 160.00, where is the bullish crossover of 10 over 55 days moving average to turn the risk again towards the downside. 4-hour chart studies are quite negative at this point, and still keep the downside more focused, unless we see regain of I would say 160, 80, 169, pardon, 161.00. That will turn the focus higher. Larger picture is neutral. The studies are neutral, as the pair remains firmly entrenched between 161.74, 78 and the 159 zone range, with break of either side to defy the near-term direction. As said, initial barriers on the upside at 160.71 is the bear trend line and 161 as a psychological and round figure barrier, break of which is to bring some more positive tone in the current trading. Otherwise, holding below 161 will still be quite bearish, and still keep the focus on the downside levels. 159.56 is basically the last barrier ahead of 159.11 low of 23rd of October, and the range floor, loss of which will be again signal for a major recovery. And this also marks 38.2% retracement of the broader uptrend from 152.67 to 163.08 break here to open way for stronger corrective action, with the 200 days moving average seen at next target at 158.47. Dollar yen is in the near term range, but the tone is still skewed slightly towards the downside following a reversal of recent peak at 80.67, high of 2nd of November, and repeated attempts higher that left series of lower tops 80.55 and the 80.43, with the 80.00 initially holding the downside yesterday, but overnight's spike lower to 79.80 that marks 61.8% retracement of the latest upleg from 79.27 to 80.67 still keeps the downside vulnerable. However, a bounce higher above 80.00 improves the current tone, but a failure to regain minimum 80.43 and next one 80.55, but yesterday's high at 80.43, I would say it would be seen as a break point to shift the near-term focus again towards the upper barriers. Otherwise, more risk will be seen on the downside as hourly indicators are still in the negative territory, along with the 4-hour ones that are descending and signaling possible break lower and possible stronger corrective action. Key supports lie at 79.50 and 79.27, higher low of 30th of October, loss of which would be signal for a stronger corrective action, and the open way 79, I do apologize, 79.59 is the 200 days moving average, and then 79.27 low of 30th of October, loss of which would be signal for the stronger corrective action of the latest rally from 77.12 to 80.67. And the dollar Swiss seems to be losing ground following upside rejection at 94.54 on a break above important barriers at 94.30-36 double top. Gains failed to sustain their levels, with a quick reversal under 94 as a round figure resistance, round figure support, I do apologize, hitting so far 93.79, where the temporary footstep was found. Hourly structure is now negative, but indicators started to point higher. Could be signal of higher low in case the dollar remains holds its strong foot, but with regain of previous barriers, 200 days, with regain of previous barriers at 94.36 and 94.54 to signal breakout and the open way for stronger recovery. Currently, the reversal is seen as corrective that retraces slightly below 38.2% of the upleg from 92.75 to 94.54, with the bulls still in the holding their pace as daily structure, daily studies are now above the MACD is above it's a midline, but other indicators starting to point lower. That could be another disappointing factor. The daily in the Ichimoku cloud base at 93, 92 so far contained dips, but a break here will be signaling false break into the cloud, will be again bringing the bears back in play, with the support at 93.65 Tenkan Sen line and the 93.34 Kijun Sen line, seeing a break of which will bring bears fully in play, and basically will signal again top at 94.54 bringing the pair back into the recent range established from mid-September and defined on the upside now with the fresh, marginally fresh low at 94.54 and on the downside at 92 zone. At this point, I would say the bears are still in control despite finding some support, unless we see the regain of 94.50, 94.54. More risk will be seen towards the downside. Bearish crossover of moving averages 10 over 55 and 10 over 20 keeps the downside pressured, but regain now of initial 94.00 gives some hopes of a possible recovery and fresh attempt at 94.30-36 and then 94.54. And a quick look at gold. Let's just see the trend. The bulls on the 4-hour chart are now gaining pace and taking control following a recent dip from 1726 to 1672, with the quick recovery accelerated by overnight's release of basically with the yesterday's acceleration above 1700 initial barrier and psychological barrier, regaining our previous resistance and important level at 1726 with 1729 seen so far, just ahead of 55 days moving average on the daily chart. A sustained break here, I would say, would be a good signal of confirming a higher low at 1672 and open way for a stronger recovery of the down move from a yearly peak at 1795 to 1672. Situation on hourly chart is bulls are firmly in control. Overbought conditions are already triggering some corrective action, while 4-hour indicators are again in the positive territory. RSI is now reversing after entering the overbought territory, but yet no clear signal of any reversal. Good support lies at approximately 1707, whereas 55 days exponential moving average and the previous lows, while break below 1700 would be again quite bearish. Ideally, to sustain the current bulls, reversal above 1700 level would be seen as a good base for a fresh leg higher, with the next barrier seen at 1734, which is 50% retracement of 1795 to 1672. As said, any break below 1700 there would be again bearish as a part of the larger down move from 1795, while the break above 1730, 1734, 1730 is also seen as a break point, is to signal reversal and confirm the higher low at 1672. And finally, the crude oil that benefited from the recent dollar's strength, but bearish structure is still quite visible on the hourly, on daily chart, while the 4-hour bulls are now gaining speed after fresh acceleration seen yesterday, breaking above initial our required levels at 87.70 and 88.00 and regaining levels above 89.00. This might be signal for the major reversal of the oil price, as the price so far retraced approximately over 50% of the latest down leg from 93.50 down to 84.75, with the positive tone seen on the lower time frames, although overextended conditions on the hourly chart might be signaling some corrective action ahead, with the ideal supports on the downside. 88.00 as a previous resistance. Before this we have 88 as a previous resistance, and then 87.86 overnight's low and the low of the day so far, with previous highs at 87, previous low at 87.70 and the high at 87.37, along with 87.33, 38.2% retracement. Ideally, reversal should occur at or above these levels in order to keep the current near-term positive structure in play for possible further correction. Daily structure is still quite negative, as the most of indicators are holding in the negative territory, and I would say a regain of 90-91 levels would bring some more positive tone into the larger picture, as the oil price remains in the strong downtrend of 100.72 from mid-September. That so far dipped to 84.33. At this point, break below, I would say break below 87, what did we say, 87, 30, 40 zone as our initial, and break below 87 would again be quite bearish at this point, and might be signaling further sideways movements after the oil price found the support at 84.33. Any failure below 87, as said, would again bring the more focus toward the downside, and further consolidation of the latest rally. Reversal above these levels would be seen as a good base for possible further extension higher, and the retracement of the latest 93.50 to 84.33 level, with the 89 with the 90 level, as said, that marks 61.8% retracement, seen as a trigger for refocusing the upper barriers at 90, 91.10, and then the key one is at 93.50. That was all for today from my side. Please, if you have any questions, if we missed anything, you can submit your questions now. Okay, it seems that we have covered all important points, and no questions after the session. Just keep an eye on today's Greek Parliament voting for austerity plan, although the wide expectations are that it will be accepted, but still this is the second very important after the release of the US elections results, so it could have quite good impact on the market. We expect to see you again tomorrow morning at the same time at 8 o'clock GMT. Until then, wish you a nice day, and of course very successful and profitable trading. Good luck.